Imagine waking up every morning worrying about bills, rent, groceries, and unexpected expenses just like millions of Americans who live paycheck to paycheck. Inflation is rising, credit card debt in the United States has crossed record levels, and savings accounts are nearly empty for many families. But here's the surprising part. With just a few simple changes, anyone, no matter their job, income, or situation, can completely transform their financial life. In the next few minutes, you're going to learn the exact steps people all across the USA use to take control of their money, build savings faster, reduce debt, and start building real wealth. And the best part? You don't need a high-paying job, a finance degree, or complicated strategies. You just need the right system. So if you ever feel stressed when checking your bank balance, overwhelmed by expenses, or unsure how to start saving, this video is for you. Today we're diving into a simple, beginner-friendly personal finance system designed specifically for the realities of living in the United States. Whether you're a college student trying to manage your first paycheck, a young professional juggling bills and credit cards, or a family looking for stability in tough economic times, everything we cover will help you take control of your financial future. We're going to walk through how to understand your income and expenses, build a realistic budget that works in both high-cost and low-cost states, reduce unnecessary spending, manage debt, the smart way, improve your credit score, start saving for emergencies, and even begin investing step by step. By the end of this video, you'll have a complete roadmap that thousands of Americans use every day to turn financial stress into financial confidence. Let's get started and take the first step toward a smarter, more secure financial life. Understanding your money flow. Before you can improve your financial life, you need a clear picture of how your money moves every month. Most people in the United States know how much they earn, but very few actually track where that money goes. So the first step is simple. Understand your income and your expenses. Start by listing all sources of income, your salary, hourly wages, side gig earnings, freelancing, or tips. Then take an honest look at your monthly expenses. This includes rent or mortgage payments, groceries, gas, insurance, childcare, subscriptions, utilities, and even small purchases like coffee or snacks. When you put everything down on paper or in an app, you'll be shocked to see how much disappears without you realizing it. One of the easiest ways to understand and manage your money flow is the 50-30-20th rule. This means 50% of your income goes to needs, 30% to wants, and 20% to savings or debt repayment. While this guideline won't be perfect for everyone, especially in more expensive states, gives you a starting point. Once you see how your money is being used, you can finally take control instead of feeling controlled by your finances. Building a practical budget. Creating a budget doesn't have to be complicated. In fact, it's one of the most powerful tools for financial success in the United States. A good budget tells your money where to go, instead of letting your money disappear on things you don't need. Start by separating your expenses into categories such as rent, transportation, groceries, entertainment, healthcare, and savings. Once you have clear categories, assign spending limits to each based on your income. The goal is to create a realistic plan when you can actually follow a strict, unrealistic schedule that stresses you out. To make budgeting easier, many Americans use apps like Mint, EveryDollar, or YNAB. You need a budget. These apps automatically track your spending, send reminders, and help you stay on top of your goals. If you live in a high-cost state like California or New York, you may need to adjust your categories and focus more on essentials. If you live in a more affordable state like Florida or Texas, you may have more flexibility. The most important thing is consistency. Review your budget weekly, make small adjustments, and stay honest with yourself. A functional budget is the foundation of financial control. How to reduce expenses. Once you understand your spending patterns, the next step is reducing unnecessary expenses. This doesn't mean cutting out everything you enjoy, it simply means making smarter choices. One of the easiest ways Americans save money is by reviewing monthly subscriptions. Many people pay for Hulu, Spotify, Netflix, gym memberships, and other services they rarely use. Canceling or pausing unused subscriptions can save hundreds of dollars a year without affecting your lifestyle much. Another powerful way to save is through meal planning. Eating out regularly in the U.S. can quickly drain your budget, especially with rising restaurant prices. Planning meals, buying groceries in bulk, and cooking at home can significantly lower your spending. You can also reduce expenses by switching mobile carriers to more affordable providers like Mint Mobile or Visible, which offer quality service at lower prices. To avoid impulse buying, use the 24-hour rule. Wait 1 day before making any non-essential purchase. This small change can prevent a lot of unnecessary spending. You can also use cashback apps, digital coupons, and store rewards programs to reduce everyday costs. Saving money isn't about sacrifice. It's about becoming intentional with every dollar. Managing debt smartly. Debt is one of the biggest financial challenges Americans face, especially credit card and student loan debt. But debt isn't something to fire, it's something to manage strategically. Start by understanding the difference between good debt and bad debt. Good debt, like mortgages or student loans, often has lower interest rates and can help build your future. Bad debt, like high-interest credit cards, can trap you in a cycle of payments if you don't take control. There are 2 proven methods to pay off debt: the debt snowball and the debt avalanche. The snowball method focuses on paying the smallest debt first, giving you quick wins and motivation. The avalanche method targets the highest interest debt first, saving you the most money long-term. Choose whichever method fits your personality and goals. Improving your credit score is also essential. Make payments on time, keep your credit utilization below 30%, and check your free credit report from annualcreditreport.com to ensure there are no errors. A higher credit score can help you qualify for better interest rates, cheaper insurance, and even better rental opportunities. Managing debt wisely is one of the strongest steps you can take toward financial freedom. Saving for emergencies. Life is unpredictable, and in the United States, unexpected expenses can hit: hard car repairs, medical bills, job loss, or sudden home repairs. That's why every financial journey must include an emergency fund. The goal of an emergency fund is simple: protect you from going into debt when something goes wrong. Start with a small goal of saving $1,000 as quickly as possible. This gives you a buffer and peace of mind. Once you reach that aim to save 3 to 6 months of living expenses, this may sound like a lot, but you can build it gradually over time. What matters most is consistency. Every paycheck, set aside a small percentage automatically. Saving doesn't work when you leave it to chance. Automation makes it effortless. Keep your emergency fund in a high-yield savings account, which earns more interest than a regular bank. Many Americans use online banks like Ally, Sophie, or Discover because they offer better rates and easy access. Remember, an emergency fund isn't for vacations, shopping, or lifestyle upgrades. It's your safety net, and having one can turn a crisis into a manageable inconvenience. Beginner investing. Once your budget is stable, your debt is under control, and you've built an emergency fund, it's time to grow your money through investing. Investing is how millions of Americans build wealth, beat inflation, and prepare for the future. But don't worry. You don't need to be a stock expert or spend hours watching the market. Start simple. One of the best beginner-friendly strategies is investing in index funds, especially S&P 500 or total market funds. These give you broad exposure to many companies, reducing risk and increasing long-term growth potential. If you prefer a hands-off approach, robo-advisors like Betterment or Wealthfront automatically invest and rebalance your portfolio for you. If your employer offers a 401k match, contribute enough to get the full match. It's basically free money. You can also open a Roth IRA, which allows your investments to grow tax-free over time. The biggest mistake beginners make is trying to time the market or investing in risky meme stocks. Long-term, consistent investing beats quick emotional decisions. Even small contributions can grow into large amounts over time thanks to compound interest. The best investors aren't the smartest. They're the most consistent.
Yes!
As we wrap up this video, remember that financial freedom, ISNT, about making huge changes all at once, S about making small, consistent choices that move you toward a more secure future. You've now learned the core foundations of personal finance in the United States. Understanding how your money flows, building a realistic budget, cutting unnecessary expenses, paying off debt, strategically creating an emergency fund, and beginning your investing journey. Each of these steps may seem simple on their own, but together they create a powerful system that can completely transform your financial life. No matter your income level, your background, or your current financial situation, you have the ability to take control. The key is to start today. Review your spending, make one small improvement, and build from there. Over time, these small steps will become habits, and those habits will become long-term financial stability. If you found value in this video, make sure to like, subscribe, and share it with someone who could benefit from this information. And before you leave, comment one financial goal you want to achieve this year. Your goal might inspire someone else watching. Thank you for spending your time here, and I'll see you in the next video.